Many people look at their own salary and think, it's too little, there's no way I can improve my life with this. This mindset is like putting a chain around your own ankle. You tie yourself down before even taking the first step. Robert Kiyosaki teaches that your salary is just the starting line, not the finish line. Think of it as the initial fuel for a car. Even if the tank isn't full, if you know how to drive and follow the right path, you can still go very far. The issue isn't the size of your salary, but the intelligence with which you direct it. Some people earn little but grow financially because they know exactly where every penny goes. Meanwhile, others with high salaries live in debt because they spend without thinking. The secret is simple. Treat your salary as a construction tool, not as a limit. It can finance your first investments, your financial education, and even create new income streams. It's the beginning of your freedom, but only if you choose to see it that way. The way you think about money determines what you do with it. Many people see their salary as their only lifeline, something just to pay bills and survive until next month. This is a mistake that traps millions of workers in the same cycle for decades. Kiyosaki says that to prosper, you need to flip this mental switch. Your salary is not your end, it's your means. It's like a seed. If you consume it entirely, you'll never have a tree, but if you plant and nurture it, you'll harvest fruit forever. Changing your mindset means stopping the thought, my salary is too small to invest, and starting to ask, how can I use part of it to create new sources of income? This shift in perspective is where great transformations are born. When you see your salary as a tool, you start thinking about education, investments, and ways to multiply what you earn. You stop working just to pay bills and start working to build a solid future. This shift doesn't happen overnight, but it begins with a conscious decision, not letting your salary be the only engine of your financial life. What you tell yourself shapes the decisions you make every day. When someone repeats, "I can't save," the brain accepts this as truth and stops looking for solutions. It's like closing a door from the inside and throwing away the key. Kiyosaki explains that the problem isn't just the money you have, but how you see what you can do with it. Limiting beliefs act like invisible barriers. They don't actually exist, but they keep you from moving forward. Replace phrases like, "I can't," with "how can I?" This simple shift turns obstacles into challenges and problems into opportunities. For example, instead of thinking, "I can't save money," ask yourself, what expenses can I cut or eliminate so I can start saving? Those who change the way they think make room for creativity. And it's precisely this creativity that helps you find small gaps in your budget, create new income streams, and spot opportunities that once went unnoticed. In the end, your limit is not your salary, it's the barriers you place in your own mind. This is one of Robert Kiyosaki's most famous and perhaps most transformative principles. He says, there are two types of things you can buy. Those that put money in your pocket, assets, and those that take money out of your pocket, liabilities. Most people spend almost their entire salary on liabilities and then wonder why they never get rich. An asset could be a property that generates rent, dividend-paying stocks, or even a business that works without your constant presence. A liability could be an expensive car that requires constant maintenance, a loan that eats up a large part of your income, or any expense that only generates costs without returns. The difference seems simple, but it changes everything. Imagine two people. The first spends part of their salary buying stocks and building a small online business. The second spends the same amount on the latest smartphone that will be worth much less in a year. After a few years, the first will have built extra income, while the second will still be relying solely on their salary. The rule is clear. Before buying anything, ask yourself, will this put money in my pocket or take it out? This single question can be the dividing line between staying stuck on a salary or starting to build your financial freedom. One of the most common traps when your salary hits your account is to spend first and save what's left. The problem? There's almost never anything left. That's why Kiyosaki recommends reversing this logic. Pay yourself first. Before any bills, before any purchases, set aside what will secure your future. The 30% rule is simple and powerful. 10% for an emergency fund. This money is your parachute. It's for unexpected situations like health issues, urgent repairs, or loss of income. That way you won't need to rely on loans or credit cards, which only increase debt. 10% for investments. This is where your money starts working for you. It can be in stocks, real estate funds, bonds, or your own business. The goal is multiplication. 10% for personal development, courses, books, training, and events that increase your knowledge and skills. The more you grow, the more value you offer, and the higher your potential future income. Setting aside these 30% as soon as you get paid prevents them from evaporating into impulse spending. It's like planting 3 types of seeds, one for security, one for growth, and one for personal evolution. Those who adopt this rule turn their salary into a tool for building wealth, instead of watching it disappear month after month. And the best part is, it doesn't matter whether you earn a lot or a little. Discipline is more important than the initial amount. Relying on a single source of income is like trying to cross a river in a canoe with just one paddle. Any setback can leave you adrift. Kiyosaki warns that if your salary stops coming in, and it's your only source, your whole lifestyle can collapse overnight. The solution? Diversify. Creating multiple income streams is like building several pillars to support your financial life. If one falls, the others remain standing. And the best part is, these streams don't need to start with large sums. Many begin small and grow over time. Some examples: rental properties, residential, commercial, or vacation homes. Once rented, they generate monthly income without your daily presence. Dividend-paying stocks. Solid companies distribute part of their profits to shareholders. It's money in your account just for owning a piece of the business. Automated or online businesses, e-commerce stores, digital courses, well-structured franchises, or outsourced services. Once set up, they run almost on their own. Creating multiple income streams takes vision and patience, but it's the path from insecurity to stability. When money starts coming from different places, you stop living paycheck to paycheck and start moving toward financial independence. Many people delay starting their financial journey because they believe it's only worth investing when they have a good amount. This is one of the biggest mistakes. Kiyosaki reminds us that wealth is built not by the size of your first step, but by the consistency of your following steps. Starting small is like planting a young tree. At first, it seems fragile and insignificant, but with care and time, it becomes solid and lasting. Even if you can only invest $50 or $100 a month, it's already a start. The magic happens because the habit solidifies, and the amounts naturally increase as your income grows. When you wait for the perfect moment to invest, you're actually delaying your results. And while you delay, you lose time, which is the most valuable ingredient for multiplying money, thanks to compound interest. Also, starting small allows you to make cheap mistakes. If you make a mistake early on, the impact will be smaller, and the lesson learned will prevent bigger losses in the future. It's training that prepares you to handle larger sums later. So, never underestimate a modest start. The important thing is to take the first step today, even if it seems too small to matter. In the future, you'll be surprised by the size of the forest that grew from that first seed. Investing is not gambling. Many people lose money because they confuse investing with betting. A real investment is based on study, strategy, and long-term vision. Speculation is an attempt to make quick money, often driven by emotion and impulse. Kiyosaki teaches that before putting any dollar at stake, you must understand three things: what you are buying, know the asset, how it generates returns, and what risks it carries, how it behaves over time. Analyze history, trends, and crises to know how to react. What your exit plan is. Be clear on when and how you will sell or collect your profits. Practical example: investing $200 a month in solid dividend-paying stocks. Reinvesting those profits can turn into more than $40,000 in 10 years, assuming a 10% annual return. On the other hand, putting $5,000 into a miracle opportunity without understanding it can make you lose everything in weeks. Mastering the art of investing also means diversifying, putting part of your money in stocks, part in real estate funds, part in fixed income. This reduces risks and ensures more stability. And never forget, the most important investment is in your own knowledge. Books, courses, mentors, and even investor groups can speed up your learning. The more you know, the safer and more profitable every step you take will be. Knowing what to do and actually doing it are two completely different things. Many people read books, watch talks, and write down advice from great investors, but never apply any of it. The result? They stay in exactly the same place, month after month. Kiyosaki is clear. Knowledge only has value when it turns into action. This means that if you learned you need to invest 10% of your salary, you should start with your next paycheck, not when you can. If you understand you need multiple income streams, start looking for ideas today, not wait for the perfect moment, because it will never come. Consistency is what turns small actions into big results. Saving $100 a month might seem little, but kept for 20 years, at an average return of 8% per year, it can grow to over $58,000. Now, if you save $500 a month under the same conditions, you're talking about more than $290,000 in the same period. It's not magic, it's math. The secret is to understand that wealth is not built in giant leaps, but in steady, constant steps. It's like training for a marathon. Running 30 kilometers in one day and then taking months off won't work. You need to run a little every day. When you apply the principles consistently, even if the results seem slow at first, the growth curve starts to accelerate. And one day, almost without realizing it, you'll be reaping results that many would think impossible, simply because you persisted where others gave up. We live in the age of hurry. Everyone wants quick results. Lose weight in 7 days, learn a language in 1 month, double their money in a few weeks. But the wealth-building game doesn't work like that. Kiyosaki always reinforces that patience is as important as knowledge when it comes to getting rich. When you plant a seed, it's no use digging up the soil the next day to check if it's growing. You have to trust the process, water it every day, and wait for the right time to harvest. The same goes for investments and income building. Those who give up too soon never see the results. For example, if you invest $300 a month in solid assets with an average return of 10% per year, in 5 years you'll have about $23,000. It may not seem like much, but in 20 years, with the same discipline, that amount can exceed $200,000. And if you reinvest all your earnings, the effect of compound interest will make that number grow even more. Patience also protects you from traps. Impatient people fall for get-rich-quick promises, join shady schemes, and often lose everything. Those with patience stay the course, reinvest profits, learn from mistakes, and build a solid wealth base that no short-term crisis can destroy. In the end, patience is not just waiting, it's continuing to act the right way, even when the results seem far away. Before any achievement happens in your life, it must first exist in your mind. Kiyosaki states that the way you see yourself directly influences the decisions you make every day. If you see yourself as forever trapped by bills, you will act in a limited way. But if you see yourself as someone capable of creating wealth, you will start making decisions that bring that future closer. Think about great athletes. Before winning a medal, they picture themselves standing on the podium. Before scoring a goal, they visualize the ball hitting the top corner. This mindset creates focus, persistence, and courage to face challenges. With money, it works exactly the same way. If today you earn $2,000 a month, don't get stuck on the number. Picture yourself earning $10,000 and ask, what would I have done to get there? That question completely changes the way you approach your day. You begin to look for opportunities, learn new skills, cut expenses that don't serve your goal, and invest better. Visualization is not fantasy, it's mental planning. It's like setting up the GPS before you start driving. You need to know where you're going before you begin the journey. And the clearer the destination in your mind, the easier it will be to recognize the path when it appears in front of you. Remember, your bank account is a delayed reflection of your mindset. Change the way you think, and inevitably, your numbers will also start to change. Have you noticed that when you hang out with negative people, everything feels harder? They complain about their salary, say investing is risky, that this isn't for people like us. And without realizing it, you start repeating the same phrases. Kiyosaki warns that your social circle is like a mirror of your future. If you want to change your life, you need to change the environment you're in. When you surround yourself with people who have already achieved financial freedom, something powerful happens. First, they show you it's possible. Second, they share ideas, habits, and strategies you might never have thought of. Third, they raise your standards because you start comparing your actions to those of people already at the next level. For example, if today you invest $200 per month but start hanging out with someone who invests $1,000 and shows you exactly how they got there, it opens your eyes. You realize it's not magic, it's method. The right environment also motivates you to act with more courage. Seeing people turn knowledge into real results makes you realize you can't stay still. It's like training in a gym with elite athletes. The simple fact of being near them pushes you upward. That's why you must choose carefully who you spend the most time with. Your income, your habits, and even your future will be deeply influenced by the people around you. One of the most common mistakes that keeps people from getting rich is called lifestyle inflation. It happens when after earning more money, whether from a raise, a bonus, or extra income, they immediately increase their expenses. They change cars, move into a more expensive house, buy more unnecessary things. The result? Their lifestyle improves, but financial freedom remains far away. Kiyosaki teaches that every extra dollar you earn should be treated as a seed for new assets, not as permission to spend more. If you get a $500 raise and decide to keep your expenses exactly the same, you can invest that entire amount. In 1 year, with an average 10% annual return, that could grow to about $6,300. In 10 years, with the same discipline, we're talking about more than $95,000. This mindset creates a snowball effect. The more you invest, the more money your assets generate, and that money goes back into new investments. This is how small amounts turn into large fortunes. The secret is simple, but requires discipline. Instead of thinking, now I can spend more, think, now I can invest more. This is the choice that separates those who always depend on the next paycheck from those who build real wealth. Money doesn't follow fixed rules forever. What worked 20 years ago may be ineffective today, and what works now may lose strength in a few years. That's why Kiyosaki insists that financial learning must be continuous. Those who stop learning inevitably stop growing. This doesn't mean spending the whole day reading about economics or watching market news, but rather developing the habit of regularly seeking new knowledge. It could be a book a month, a course every quarter, strategic conversations with experienced investors, or even study groups about finance. Think of this example. Someone who learned to invest in real estate in 2005 and never updated themselves may be missing out on excellent opportunities in real estate funds, digital platforms, and leverage strategies that didn't even exist back then. But those who keep learning adapt quickly and take advantage of trends before most people. Investing $50 per month in books, courses, and training may seem small, but the return is not just financial, it's multiplicative. A single piece of information could save you from losing $10,000 in a bad deal or help you earn $20,000 in a good one. Knowledge is the only asset that never loses value, doesn't suffer from inflation, and can't be taken away from you. The more you know, the more prepared you are to turn any salary into a wealth-generating machine. Kiyosaki always repeats, money alone won't motivate you for long. It can pay bills, provide comfort, and even bring security. But if you don't have a clear purpose, there will come a point where none of that is enough to keep you disciplined. Your why is the reason you will keep investing when it seems easier to spend. It's what will keep you steady when the market drops, when unexpected events arise, or when results take time to appear. It could be ensuring a comfortable retirement, paying for your children's education, traveling the world, or even leaving a legacy for your family. For example, imagine your goal is to generate $5,000 per month in passive income to retire comfortably. That number becomes a clear target. Now, every investment, every expense cut, and every financial decision is guided by that goal. Money stops being something abstract and becomes a concrete tool for building your future. Without a strong why, it's easy to give in to the temptations of the present and sacrifice tomorrow. With a clear purpose, you turn every financial choice into a conscious step toward your goal. Most people see financial difficulties as enemies to be avoided, but Kiyosaki teaches that challenges are actually disguised teachers. It's in tough times that you learn to be creative, cut excess, negotiate better, and look for new ways to generate income. Think of someone who loses a source of income and instead of panicking, decides to start a small online business with just $300. At first, it's hard, but with effort, that business starts generating an extra $100 per month, then $500, and a few years later becomes the main source of income. Without the initial difficulty, that person might never have made the decision that changed their life. Financial challenges also force you to look at your numbers more closely. Many only realize they overspend when they're forced to cut back. That's when they discover they can live well on less, and that with the savings, they can invest more. The secret is to change the question you ask yourself. Instead of thinking, "Why is this happening to me?" ask, "What can I learn and gain from this situation?" This shift in perspective turns problems into opportunities and puts you on a path of continuous growth. Many people think it's only worth celebrating when they achieve something big, like paying off their house or reaching the long-dreamed-of $10,000 monthly passive income. But Kiyosaki reminds us that on the road to wealth, small victories are just as important as big ones, because they keep motivation alive. Saving your first $100 for your emergency fund, making your first stock investment, or paying off a debt that seemed endless, all of this is progress. And progress, even if small, builds the confidence to take the next step. When you recognize and celebrate these advances, you're reinforcing the habit of acting smart with your money. It's like telling your brain, "Keep going, we're on the right track." This creates a positive cycle. Each achievement generates more motivation, which generates more action, which generates more achievements. Celebration doesn't have to be expensive or extravagant. It can be a simple dinner, an outing, or even a quiet moment to acknowledge your effort. The important thing is to remember that the journey is made of steps, and every step you climb deserves recognition. Building your financial independence doesn't happen in a single move, but in hundreds, even thousands, of small decisions over the years. That's why Kiyosaki compares this process to a marathon. You need preparation, endurance, and discipline to reach the finish line. Some days will be easier, others will require more willpower. There will be moments when the result seems far away, but that's exactly when you should remember everything you've built so far. Every dollar invested, every expense cut, and every new skill learned is like another mile covered in this race. And when you cross the finish line, that moment when your money works for you and not the other way around, you realize every effort was worth it. More than money in the bank, you've gained the freedom to decide how to live without being tied to a paycheck or a boss. Now, I want to ask you, what will be the first step you take today to get closer to your financial freedom? If this message made sense to you, like this video, share it with someone who needs to hear it, and subscribe to the channel to keep receiving content that can transform the way you think and act about money. Because at the end of the day, the decision to change your life starts now.